Welcome back everybody to another market analysis video. We're going to go over gold and see what ended up happening after we sent out our analysis yesterday. Yesterday we were more on the bullish side because of the fact that price action on the 4 hour at that time was trading above the 4883s, which is around this area of interest that we had marked off here. So it was this support that we needed to stay above in order for us to continue following that bullish bias. Now, the recent shift that we have seen in the price action is the current de-escalations talks that we continue to get between Iran and the US. We've also seen some progress being made between Russia and Ukraine. And so when we connect that with the technicals, kind of like what I was talking about last night, we needed to stay above the 4883s for the intraday timeframes to still be bullish. But with those de-escalation comments that we got overnight, if I zoom in here, we can see that it's that same candle that I showed you guys on market. It was the candle that got up into this wick high, and then we started to then exhaust and push below the 4883s. That's when in the Discord chat I sent the headline and I told you guys, hey, we're getting some more de-escalation talks. If we can maintain below the 4883s, then this would be a good technical and fundamental combination. The fundamentals at this moment, it showed us that we had de-escalation talks. And so we had a level of anticipation that if we could stay below 4883s, then below that area, it was more likely that sellers would come in and we would drive price lower, at least into the 4800s. If we can break below that area, then we can possibly move lower. If you watch the breakdown, that's exactly what we were talking about. Again, it's not about being right or wrong. It's not about trying to overcomplicate it and see, oh, but what about the rate cuts? I thought that was being priced in. No, we understand the macro drivers, but then we allow price action to give us those clues as to when that is actually being priced into the market. So again, at this moment, even though let's say we had geopolitical risk still remaining, like we were talking about, and we were more bullish on the macro perspective, again, we then saw de-escalation talks. And so we have to prepare ourselves. We cannot just marry the macro bias that we were talking about. No, we have to prepare ourselves. We're seeing the escalation talks. If we break below this area, you see how we say, if we break below this area, you see how we set ourselves up to then look out for those moves. Then you have double confirmations. You have fundamentals backing up your bias. You then had technicals, for example, breaking below the lows. You then retested that area. You failed to stay above, right? This is what you're seeing here from price action perspective. You have candles failing to break back above or even close above the 4883s. Moves down to the support. You had a bit of exhaustion at this area, another pullback into that exact price point. You had a slight break above, and then you started to get, once again, exhaustion, failure to stay above that area. Then you got moves lower, and eventually you broke the lows. So again, it's not about marrying the bias. It's not about being right or wrong. It's about having context. Let's say, for example, if we got those de-escalation talks, but then price was failing to stay below the 4883s, why are we going to fight that? What we should do instead is just look at what the technicals are telling us at that moment, and that gives us the clues as to what the market is actually pricing in. Now on this 1 hour time frame, we can see that we are more bearish from an intraday perspective. Even on the 4 hour, now that we broke below that 4883 area, we started to see a lot more selling pressure coming in once we got below that from a technical perspective. And right now we're getting a bit of a recovery from this previous area of interest. But in my opinion, with the current technicals that we're seeing, with some of these fundamental events like the rate cuts, geopolitical risk, a lot of these things, they seem to be priced into the market based on what we're seeing with the price action. So what we can do is just prepare to see possible reactions around the 4800s for some continued moves to the downside. Another option would be to, let's say, for example, we're breaking above that area, just let the pullbacks take place and watch out for reactions at this area here. You could look to adapt, let's say, for example, to some short-term buys back above this area. But from an intraday perspective, it really wouldn't be until we're back above this zone here that we can say, okay, clearly we had a sentiment shift and we have a lot more buyers coming in. And the last thing I wanted to mention before I end this video is that tomorrow is not NFP, guys. Remember, NFP got postponed to next week, where it's on, again, it's on Wednesday 8:30 in the morning, and that's Eastern hours. So I'll see you guys then, and we can talk more about NFP closer to that date.